Welcome to The Explainer. Today, we're diving into one of the most catastrophic financial collapses in modern history, the fall of Lehman Brothers. We're going to look at how a 150-year-old titan of Wall Street just vanished and what that unleashed on the entire world. And that quote right there, it just nails it. For generations, Lehman Brothers was this absolute fortress on Wall Street, a name that meant power, prestige, survival. And then, poof, it was gone. This wasn't just some company going under. It was a fundamental belief system that got completely shattered. You're going to want to remember this date. This is the day the global money machine didn't just stall, it literally broke. The engine seized. The collapse set off a global panic that wiped out trillions of dollars in wealth and brought the world's most powerful economies to their knees. Right. That's the billion-dollar question, isn't it? How does this happen? Well, it wasn't one thing. It was this long, slow burn of bad decisions, a flawed culture, and one massive, fatal gamble. So to really get our heads around this, we've got to rewind the tape, way back. You see, the story of Lehman Brothers doesn't start in some slick New York skyscraper. Nope, it starts much, much earlier, down in the heat of the American South. Let's dig in. It's kind of wild to think about. Three brothers started this thing in 1850. Not as bankers, but as cotton traders in Alabama. And their whole identity was built on resilience. They survived the Civil War, they moved to New York, and basically helped invent modern investment banking. I mean, partnering with Goldman Sachs to take Sears public, that was a game changer. They built this reputation for being the ultimate survivors. And this slide really gets to the heart of their evolution. They went from this old-school firm built on handshakes and trust to the sleek global machine. Their bread and butter became underwriting. Basically, they'd buy a company's new stock and then sell it to investors. They took on all the risk for the potential of huge profits. It's a high-stakes game, and man, were they good at it. But here's the thing. Underneath that polished, first-class exterior, the empire was starting to crack. That same culture that made them so tough was about to curdle into something way more dangerous. So this is where it gets really juicy. In the 1980s, American Express bought Lehman, and it was a total disaster. A civil war inside a bank. You can see it here. You had the Lehman partners, these ruthless, ambitious traders from the go-go years, clashing with the super corporate, by-the-book culture of Amex. It was oil and water. The Lehman guys refused to be managed, and it created this toxic vibe where all that mattered was the short-term win. Think about that. The head of American Express looked at Lehman and didn't see an asset. He saw a threat to his entire company. This conflict is so crucial because when Lehman finally spun off and became independent again in 1994, that aggressive, risk-addicted culture was completely off the leash. Okay, so fast forward. Lehman is free again. And what do? They make a bet, a huge one. They got hooked on the age of easy money and dove headfirst into the riskiest, most explosive corner of the market. So what was this magic money tree they were chasing? Well, it had a name, subprime mortgages. These were basically home loans given to people with shaky credit. Yeah, they were a lot riskier, but they offered way bigger payouts. And Wall Street? They could not get enough. The game they were playing was so simple and just incredibly dangerous. It was all about volume. Lehman would scoop up billions of these risky loans, and they didn't really care if the loans were good or bad. All that mattered was that they got to collect a fee on every single transaction. It was a factory assembly line for risk. And the results of all this, they were massively, terrifyingly over-leveraged. Okay, think of it like this. For every $1 of their own money, they were borrowing and betting with 30 or 40 more. As long as you're winning, you're a genius. But the second you lose, you're completely wiped out. And that's exactly where they were, a house of cards, just waiting for the slightest puff of wind. And then, in 2008, that breeze arrived. Except it wasn't a breeze. It was a hurricane. The U.S. housing market started to crater, and Lehman's house of cards came crashing down right along with it. So, as home prices plummeted, all those subprime mortgages Lehman owned became toxic, worthless. And then, something terrifying happened. The credit that basically acts as the oil in the engine of the global economy just stopped. It vanished. Banks were suddenly terrified to lend money to anyone, even to each other. The whole system just froze solid. The government was scrambling. You had the Treasury Secretary Hank Paulson practically begging other banks to rescue Lehman. His famous line was that he was asking them to buy a house on fire. But see, they'd saved another bank, Bear Stearns, earlier that year. This time, the fire was just too big. Nobody wanted to touch it. No white knight was riding to the rescue. So that was it. September 15th. Game over. Lehman Brothers filed for bankruptcy. And with over $600 billion with a B, dollars in assets, it was and still is the largest bankruptcy filing in U.S. history, period. The untouchable had finally been touched. And this is the truly scary part. The problem didn't stop with Lehman. As you can see, it was a chain reaction, a contagion. The bankruptcy sparked pure panic. That froze the credit markets. Then major banks like Citibank were suddenly on the brink. And before you knew it, markets in London, Tokyo, Hong Kong, everywhere were in a complete fear-driven freefall. This wasn't a Wall Street problem anymore. This was a global five-alarm fire. At the end of the day, Lehman's story is more than just a failed bank. It proved that in our modern, hyper-connected world, the collapse of just one giant domino can set off a chain reaction that nobody can control. It forced a question on the world that, frankly, we're still wrestling with today. Is any single institution truly too big to fail? Can we ever really afford to find out again?